Greetings, guys. It's Master Lilo. So I have decided to bless you guys with the FBI trading manual for level 1 traders. Ne? So this is just part 1. So yeah, this is the introduction of the FBI, what we specialize in. And then these are the services provided by FBI. So trading license and mentorship, signals, market direction, individual chart analysis. So if maybe you are trading something like Jump on the synthetics, or maybe Nasdaq or AUD CAT, something that maybe we don't usually or we find it very volatile, so we can do the individual chart analysis for you. It will also help you with the funded challenge to pass your funded challenge. We also help you with the FBI system. So here we do the installation and the teaching. We teach you how the FBI codes work, and also other trading consultation purposes, like maybe if you want to learn seasonal trading or the market insights and stuff like that. So here are 5 tips from me. Before you start trading, you need the trading knowledge. You need to practice the trading knowledge. You need to develop strategies from the knowledge, and then you need the psychology to integrate everything there, and then you need discipline. Okay, so discipline is very important because it's the one that make you to decide whether to buy or not. So yeah, so here it's just a little bit of history of candlesticks. So if you know a manual by this guy Munihisa, then you know the candlesticks. So candlesticks are just real time data, so you should be able to read that. Ne? So I also discovered my own theories in the candlesticks there. So these are the ones that I'm about to share with you guys. So with me, the bullish and the bearish candles do not matter. What matters mostly is the sell force, the buy force, and the pressure. Okay. So here I showed you guys institutional candles that I consider. Number 1, momentum candle there. So here the pressure inside is 2 times longer than the longest wick. So here we have the bottom wick and the top wick. And then we have indecision, whereby we have equal buying force and buying and selling force, right? And then we have a supply candle. Here we have the selling force is 2 times longer than the pressure and the buy force, if there's any. And then here we have the demand candle. Here the buy force is 2 times longer than the pressure and the sell force, if there's any. And then here I showed you guys the highs and the lows of the sessions, because we are about to do candlesticks arrangements. So with candlesticks arrangements, here we have an out bar. So I've described the high of the current candle is higher than the high of the previous candle. The low of the current candle is lower than the low of the previous candle. So that's an out bar. And then here we have an inside bar. Here the high of the current candle is lower than the high of the previous candle, and the low of the it's lower than the low of the previous candle, and the low of the current candle it's higher than the low of the previous candle. So this is an inside bar, and then this is an up bar, and then this is a down bar. And then with this I showed you guys the entries candles. So here we have the star candles. So with the star candle, you consider the last momentum candles. You can have some dojis there and all those candles, but the moment the bottom of the momentum candle is broken and retested there or confirmed, then you can make your entry there and then your stop loss there. And then you have the supply candle here, and then yeah, same thing, the market must retest at the bottom of the pressure of the supply candle and then go up, your stop loss there. So we have institutional trigger here, so this is increase in length, increase in volume in most cases, and then the high of the smaller previous candle must be retested, and then market goes, and then your stop loss is there, right? So here I showed you guys the out bar engulfing. Here I have the, maybe you can say, bullish engulfing out bar. So also the same thing, the high of the small one tested, and then market goes up, and this side we have a strong buy force. Do you see that? So here it's just showing you guys how to evaluate the impulse, but on level 2 we go deeper. So here we just show you guys the supply zone, the out bar phase here, the exhaustion phase, so where the market can get tired, then the demand zone where you can opt for buys, and here you can at the supply zone you can opt for sales. So those are the things that you need to know. And then I showed you guys the swing. You have the left rejection, the highest high, and the right rejection. The right rejection must be induced. So this is not a head and shoulders. I know technical traders, they go head and shoulders, and then no, it's not, because you need to know the Fibonacci, you need to know the liquidity, so you need to know a lot of things. So this is upper swing, this is a lower swing, so you can also take your Fibonacci from there to there, in this case. So this is part of this Fibonacci rules. And then we have the Fibonacci zones there, explained between -9 and 9. So this is upper liquidity zone, so meaning the highs formed within this are equal highs. And then we have the reflection zone here, whereby this move will be reflected here, so the length will be reflected if we have a retracement between mostly 27 and 36. Okay, 27 and 36 of the Fibonacci level there. And then between 36 and 81, that's a potential retracement zone. That's why you don't want to trade if you are not a level 2 or level 3 trader, because there you consider a lot of things. We consider manipulations, we consider liquidity, we consider the zones, we consider a lot of things. So if you are just a beginner trader, stay out of the potential retracement zone, and then consider buying maybe around 36 there. Okay, so here it's a reflection of the Fibonacci, this is a retracement of the Fibonacci, and yeah. So if you guys want this manual, you can just DM me. The manual is for free, but the sessions are the ones that are paid. So yeah, showed you guys even level 2 knowledge there, the triangulation, just a little bit of some of the theories of the double bottoms there. And then here we show the trend lines. We have structural trend lines, and we also have different types. So here I showed you guys the structural trend line, how it's supposed to be. Like, it's supposed to take out the previous highs like that. So you know, this is a structural trend lines. And then we have order flow. So order flow, you have just a trend line formed by two buying or buy setups. So the third touch there must buy. So that's the order flow. And then I showed you guys the different types of trend lines. Like this one here, it's forming a dynamic support, and then the implication also if we have such. So the trading zone is very important in this. So here we have rising support, which implicates if it's broken, the short sell if you're in the buy zone, and the long sell if you're in the sell zone. And here we have rising resistance, which shows a potential turn to the downside. Also depends on the zone. So here we have horizontal support and resistance. So there's volatility around this one because you have good buy, good sell, and yeah. And then I showed you guys some linear chart patterns there. So here we have rising channel. If it's in the sell zone, then this will be a long sell. If it's in the buy zone, it will be a short sell. So that's all. Rising resistance also there. And then right angle triangle, this one has got a good buy if it's in the buy zone, and a good sell if it's in the sell zone. So usually I suggest you wait for transition. Okay, so transition is part of level 2 knowledge, but if you keep checking the videos here, I'm gonna share a lot of knowledge, guys. So here I showed you guys the major trend. It's formed by the 200 moving average, and the minor trend by the 50 moving average there. Then I showed you guys the importance of the computerized indicators, especially those that mark the volatility. So here we have Bollinger 200, and then the top part is the buy zone, the bottom part is the sell zone. So if we have a declining resistance, for example like this in the main in the main window, and then on the oscillator window your RSI is also between 54 and 81 there, then you know this will buy, and it's a long buy because you are in the buy zone. So that's what I tried to show you guys here on the strategies. So yeah, no, we'll continue with the contracts and the fundamentals, risk management and psychology later. So thank you guys, Master Lelo. Keep posted, and yeah, if you want the manual, you can also WhatsApp me or email us here, but I prefer WhatsApp there. So just WhatsApp me there, and then I will send you the manual.